Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's bullish stride continued at the start of the week from Friday and extends into Tuesday as the US dollar wobbles as investors grew more convinced that the US Federal Reserve will turn the dial back on its interest rate increases next week. With little local headlines for the Australian dollar, market participants will turn their attention to the US monetary policy expectations as the US central bank will now enter its blackout period before the next US Federal Reserve Open Market Committee, or the FOMC, meeting. Meanwhile, in overseas economic data, we still wait for the US gross domestic product, GDP that is, in the US that is, and also looking to the personal consumption expenditure, or the PEC report, which may shed some light on consumer spending, income growth and inflation. Looking at the Australian dollar though, I still expect to see the market take the challenge towards that 70.5 level or up towards 71 figure 15 before traders may start lightening their position, as in starting to sell out some of their long due to the risk events that's coming up. Looking at the euro, the bulls have nearly claimed their topside target around 109.4560 after posting a 9-month high, but didn't sustain and fell back very sharply under 109. Looking ahead though, as I mentioned, the markets will be keeping a very close watch on the US data, and along with that, with the Fed announcement on February 1 to see if they will go 25 base points or move to 50. There is around about 90%, I believe, in the papers that expect to see a 25 base point. So therefore, it may actually weaken the dollar a little bit more. The key level is around 101 figure 15, as it trades currently at 101.70. Any pullback for the euro likely to find support around about the lows that's seen around 108. The dollar yen, well, the market surged overnight and reclaimed the 130 level, and now all eyes look to 131. It is assessed though we may see a slight pullback towards this support level close to 129, but overall I feel the market will most probably continue its upward drive considering the technicals have firmed up, and therefore looking to that, as I mentioned, target around 131.50-80 area and reassess from there. Although my view for the pound was neutral as it reached the 124 objective, we're finding a little bit of negative price action coming into play here, and now looks possibly for a pullback after printing a 7-month high around 124.47. If we do see a pullback, I do expect to see the move towards 123.55 or down towards 122.90, but that call may be shallow in terms of opportunity may come back to the bullish case and see another test of that top side. So therefore, let's not abandon the area of 124, as I do expect to see a revisit. Finishing up with gold, but the market still maintains its bullish bias as it edges closer to its measured move, or the objective, which is at 1,951 to 52. Any pullback likely could be shallow, as I feel that the bulls are still very content in taking this market up towards its objective and reassess, as I feel there may be a little bit of unloading positions, as in if the market is carrying long positions, that we might see some profit taking and possibly see a pullback, with the support around about 1,880.90. And finishing up with oil, well, the market is a little bit quiet due to the lack of interest, as the direction still remains somewhat toppy around the 81, 80, 90 area. We've seen 91 as a high, but we can see it continuously challenging this top side. The market's failed. Weak technicals are in play, and an overheated ADX therefore does support a pullback anywhere towards the region of 78, 50, 80 and reassess. That wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.